insurance is not something we talk a lot about, but let's start with let's tie it a bit to the data that came out today. GDP for second quarter of 2011 up to 7.7%. Obviously, that should open up great opportunities for insurance as the economy grows, and of course, companies are doing more business. What are your expectations for insurance growth going forward in Nigeria?
In the last couple of years, the insurance sector has experienced quite a number of reforms by the regulator, and that's NICOM. And the focus of the reforms has always been to drive premium growth for the sector. We've seen the enforcement of compulsory insurance in 6 major insurance businesses. And if you look at the earnings recorded by insurance sector, most of the insurance players in the last half year, they've actually recorded double-digit growth. I expect that to continue going forward. By the time we look at the tremendous opportunity that exists for them in the local content act in the Nigerian oil and gas sector. So I expect impressive growth for the insurance sector going forward.
Okay, the title of your report is Strutting at the Pace of Reforms, and that implies that the insurance sector is not really growing to its full potential. But give us some insight into some of these reforms. What have the regulators been doing and authorities been focused on doing recently?
The focus, like I said before, is to drive premium growth across 6 major classes of insurers for Nigerian market. And also another focus of the reform is to try and clean up the books of these insurers, try and make their earnings a little bit more reliable for investors to actually tap into the opportunities that they can get in the sector. And also they've also tried to enforce, try to clean up the sector in terms of eradicating fake insurance. We know that there is a lot of fake insurance products in the motor segment. These are the reforms that have been going on in the last 2 years, and we expect that to continue.
How positive have those reforms been? We know that the sector grew about 25% last year in terms of premiums. How positive, to what extent would you say those reforms have contributed to that performance?
I think the biggest impact that the reforms have had on the insurance sector has been the quality of earnings that they now churn out. We've seen insurance being forced to make provisions for outstanding premiums and for investors, and that's a very important step because we are beginning to see the insurers in their true state, and that has impacted their performances. And I think the earnings that they've posted in the last few quarters are actually very reliable. And based on that, we can begin to expect better performances going forward.
All right, but you made a point as well that the insurance sector is unattractive to foreign capital simply because of weak regulation. So obviously we haven't done enough, and unpopular insurance culture in Nigeria, simply because, at least on the retail side, insurance is not something that is embraced broadly in Nigeria. What would it take to bring foreign capital into insurance in Nigeria, in your view?
I think it's better regulation, more purposeful regulation, trying to stamp out or eradicate fake insurance. The retail market is a mass market for insurers to tap into. And I think given Nigeria's demographic advantages relative to other emerging markets, there is a lot of potential for growth in that sector. So the regulators should focus more on the retail. Having cleaned up the books of these insurers, they should now begin to focus on how to drive premium expansion in the retail segment. And hopefully the larger populace will begin to embrace the culture of insurance, and that will have a positive impact on the performance of the players.
All right, let's talk about the bourse and its performance, at least the sector performance on the bourse recently. Since 2009, it's really underperformed the market, and the market has not been doing well. So that says a lot about how the sector has done. But I note that you've listed quite if you ask me, very optimistic upside potential for some of these companies. GTA, you've listed 67% upside simply because of the valuation today. For some, you've listed as much as 97%. What will be the catalyst to get these companies at those levels in your view?
I think it's the sustainability of their earnings. The earnings that they've recorded in the last half year has been impressive. And I think that for Custodian, for instance, it's one of the most profitable insurance companies that we have on our coverage. It has one of the lowest combined ratios, and it has a very strong underwriting profitability. It's very strong in the oil and gas sector. We've seen tremendous growth in premiums on the back of underwriting of oil and gas sector. Particularly, I like their agency platform. They have signed agreements with oil servicing companies. And based on that, I think they would be able to sustain their earnings going forward. And one key positive for them also is the fact that they have a very strong, robust risk management framework, very conservative investment framework, and that should help them to minimize the volatility that is common with insurance companies.
Let's talk a bit about GTA, and obviously we know a lot about that company changing ownership that we expect before the end of the year, with GTB selling out its position. What impact do you think that's going to have on their business going forward?
Well, based on our discussions with GT Assurance, we are optimistic about the transaction. We think that they can leverage on the already established relationship with GT Bank. They've signed on that agreement for upward of 3 years. So I think the bank assurance model that they built over the years on the back of being subsidiary to GT Bank should actually continue going forward. I do not expect that divestment to significantly impact them. I think the investors, the group of the consortium of investors that have invested in GT Assurance, more importantly, they are going to bring in better corporate governance into the company. They're going to improve the corporate governance framework of GT Assurance, and we expect that to translate to positive earnings growth for them going forward.